Welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita Khemka, and my colleague.
Hello there, I'm Yatin Mota.
Well, Yatin, the euphoria that we've seen over the last 6 days, showed signs of abating yesterday. It was a down day, or in fact, it was kind of a quiet day in terms of the index. But today we have snapped out of the 7-day up move that we have seen on the index. Yesterday was more of a day of normalization, consolidation. Today that has deepened a bit. You can say that because it's almost a 200-point cut on the Nifty, and Sensex has seen almost an 800-point or a 1% cut. Of course, lots of factors at play. Some bit of profit taking after this very stellar rally that we've seen over the last 6-7 sessions, and of course there's uncertainty over US tariffs as well, right? Every day we have a new statement coming in from Donald Trump. So there's a lot of confusion, although he has maintained that he will exercise leniency, but no one knows what that leniency will be. So yes, on the back of that and the fact that we are approaching the April 2 tariff deadline, there is some bit of jitters, and their markets are on tenterhooks, and that's visible because yesterday we saw deeper cuts across broader end of the markets. Today the broader end of the markets was relatively underperforming, but nevertheless it was a 0.5% kind of cut on the Nifty Midcap index, and the breadth has really worsened for a second day on the trot. The NSE advanced decline ratio today was almost 1:4, Yatin, 500 advances to 2,100 declines. So yes, breadth has taken a hit, and sectorally as well, most of them were trading in the red. A couple of sectors that really stood out today were the likes of auto and FMCG, which by the way have sat out of the recent up move. Today some bit of buying there, but IT back in the red after 2 days of gains. Pharma under pressure, PSU banks as well, that saw a good run day before yesterday. Today some bit of pressure once again after pressure yesterday. But a couple of changes to watch out for, Yatin, on the index. Zomato and Jio Financial will enter Nifty tomorrow, and Britannia and BPCL will be exiting the Nifty 50 index. Of course, if you look at Zomato and Jio Fin, they are expected to see inflows worth over $400 million as a part of this index rejig. But if I take you through the individual movers in today's session, Yatin, Trent again had a good day after it clocked in gains yesterday. IndusInd Bank, it has seen quite a bit of pressure. The stock continues to be in F&O band, but today among the top gainers, Airtel, HCL Tech, Grasim were the others. But if you look at some of the laggards, the losers list was a little longer, in fact a lot longer than the gainers list. But to point out a few names, NTPC, Tech Mahindra, Cipla, Bajaj Finance, BPCL, these were some of the notable laggards. Remember, oil is back around that $73 a barrel mark, 3-week high. So because of that, I think BPCL and OMCs were under pressure. But Yatin, broader end of the markets, quite a few winners, including the likes of Siemens.
Yes, Siemens was up nearly 6% after the NCLT has given nod for the demerger of Siemens Energy. Hindustan Aeronautics, that is also one stock we'll talk about in detail, but clearly on the back of GE supplying one of the engines 404 to HAL. That resumption of supplies led to the stock surging nearly 3% in intraday trade. IndusInd Bank, obviously one of the top F&O gainers, gains probably because of the F&O ban likely to be over today, because the market-wide open position limit has been below 80% now. Trent also doing well, almost 2.5% after brokerage notes suggested that the store addition has been going on smoothly. What was not doing well is the likes of the PSU, NBFC, so IREDA, REC, HUDCO. All of these stocks, down by nearly 3 to 4%, so selling pressure coming in there. BSE Limited, and obviously because the market is down and cooling off, exchange stocks were slightly soft in trade today, especially BSE, down almost 4%. And because Monday is a public holiday because of Ramzan Eid, we have the rebalancing, as Nandita was pointing out, on the expiry day, which is Thursday tomorrow, wherein Zomato, would see inflows, but the stock clearly ahead of the rebalancing, down by nearly 3%.
That's true, Yatin. Zomato down, and of course there's been somewhat of a downgrade also coming in from brokerages. So we'll talk about that in just a bit, but let's talk about some optimistic things that are happening instead of pointing out the kind of sell-off that we saw today. Goldman Sachs has come out with a report, and it has named 10 top buys for strong returns amid all the tailwinds, when it comes to Indian economy. Some of the names among the top 10 stocks that they have shortlisted are the likes of HDFC Bank and AU Small Finance Bank. From the banking or financial space. They have Adani Ports, Titan, Godrej Consumers, Indigo, M&M, Apollo Hospitals, Power Grid, and even Make My Trip, NYSE listed, but it is among the top 10 buys that Goldman Sachs has highlighted. Taking you through some of them, HDFC Bank in particular, they have a buy rating on the stock. Target price is at 2090, which implies a 15% upside from yesterday's close price. Now, why has it really shortlisted HDFC Bank? Because it believes that the bank is best placed to benefit from RBI's latest liquidity measures, and those would actually translate into deposit growth picking up across the system. And HDFC Bank, has demonstrated history of gaining deposit market share in the past. So this bank, according to Goldman Sachs, is best placed to gain deposit market share due to the RBI's liquidity measures that they had announced recently. Aside of that, they are also expecting a pickup in loan growth. Of course, post the merger, the loan to deposit ratio had dipped, and that was a major concern, but that is behind now, and which is why a pickup in loan growth can be expected going forward, according to Goldman Sachs. Aside of that, they also expect healthy earnings growth at a compounded annual growth rate of 15% over FY25 to FY27. HDFC Bank, has in fact been outperforming recently, Yatin, and has contributed to the gains that the Nifty Bank Index has seen in tandem with Kotak Bank. So yes, Goldman Sachs here pointing out all the tailwinds when it comes to HDFC Bank, and it is among the top 10 buys that Goldman Sachs has really shortlisted. Aside of that, they are also upbeat on M&M. M&M had a very strong run in 2024. 2025, not so much. Of course, there's a lot of uncertainty around tariffs on autos as well, which is why autos haven't really done all that well, even in this leg of the rally. But particularly for M&M, Goldman Sachs has set a target price of 3,800 rupees, and they are saying that there could be potential value unlocking in the unlisted subsidiaries in sunrise sectors, including the renewable energy as well as clean mobility. Of course, supply ramp up of the recently launched battery electric vehicles like BE6 and XEV9E will take place starting second quarter of calendar year 2025. And they are also seeing a further pickup in the farm equipment business, which of course has seen a pickup due to strong monsoons in calendar year 2024. And they are expecting this business to gain momentum going forward. And they are also pointing out that the company may in fact qualify for PLI scheme incentives on its EV portfolio potentially during this calendar year. And of course, execution on the Thar ROXX order backlog is also expected through the second half of current fiscal year. Aside of that, last stock that I want to point out of the 10 stocks that Goldman has picked up is the it's one stock from the hospital space. It's Apollo Hospitals. I've spoken to a lot of experts, and I have asked them to point out some sectors that are actually tariff proof and they offer good long-term opportunity, and most of them have also pointed out hospital and diagnostic stocks. So for Apollo Hospital in particular, Goldman Sachs has a target price of 8,025, and they are expecting improvement in the hospital occupancy by 210 basis points in FY26, driven by increased marketing. They also expect occupancy to improve and lead to operating leverage. And of course, they also expect the Apollo 24/7, their online platform, to break even. In fact, the company is on track to break even. That's what Goldman Sachs believes. So yes, diagnostics also offering strong future potential, which is why they've also shortlisted Apollo Hospitals from the hospital names. But yes, all in all, basket of 10 stocks, and they have consumption, banking, a lot of stocks from all these sectors.
Right. Moving on, to Hindustan Aeronautics, and in the past few trading sessions, defense stocks have really done well. BDL won few orders, BEL won some orders, and HAL, that stock also remains in focus because we saw good recovery, from the recent lows that it made. In fact, Hindustan Aeronautics was in focus today. The shares moved almost 4% higher intraday, ending the day higher by nearly 3%. After GE Aerospace, in its press release, mentioned that they have started to deliver one of the first F404 engines which are used to make the Tejas aircraft, which is the light combat aircraft MK1A. Why it is important? Because after almost a 1.5 year delay, the deliveries of these engines have started. Remember, Indian government has given the prestigious Tejas light combat aircraft orders to Hindustan Aeronautics, which is the Mk1 and the Mk2 variant. Now, if you look at that delivery is started. However, the technology transfer issues relating to F414 are still getting settled with the government of India as well as the US. So, the clarity on that particular platform is also awaited, because India is planning to have the indigenization for this engine variant. So, both F404 and 414 engines from GE Aerospace are important for Hindustan Aeronautics. Why this particular stock has seen rally? Because Morgan Stanley also believes that Hindustan Aeronautics will most likely get a near 5 lakh crore order book moving forward, with Prachanda helicopter to Tejas aircraft. So, a lot of new orders, and the Sukhoi upgradation order is also likely to come to Hindustan Aeronautics revenue recognition moving forward. Why engine is important? Because GE has seen a delay in these orders, with engines now coming in, and the order book of HL nearly 3 times FY24 revenue is something that the markets are keenly watching out for, because without the engines the orders couldn't be executed, and now GE has promised that they would be regularly supplying these F404 engines to Hindustan Aeronautics. So, good news for not only Hindustan Aeronautics but also for the Indian Armed Forces, especially the Air Force, because Tejas platform is something which the Indian Air Force now needs, given the fact that the MiG-21 fleet is started depleting.
Yes, and it's been a spate of good news, right, for these defense companies, Yatin, given the fact that the Defense Acquisition Council has also recently given nod for 54,000 crore worth of orders, and all these companies that you mentioned, HAL, BDL, all of them stand to benefit. Not only that, even Europe is ramping up its defense spending, right, and which is why some of these Indian companies will also be beneficiaries of that, and we've seen a good rally in these stocks, although they are still 30-25% away from all-time highs or 52-week highs. But they have done well, over the last 1 month or so. But what's not done all that well, and what's not looking very appetizing in the current market scenario is the likes of Zomato and of course also Swiggy. All these quick commerce players reeling under the threat of competition, and downgrades are pouring in. These stocks have eroded quite a bit of market value as well. Looking at Zomato, almost a 20-30% kind of a cut on a YTD basis. Even Swiggy, for that matter, below its IPO price, it has shaved off 40% from its highs. So yes, not going good for some of these quick commerce companies. Latest report coming in from BofA Securities, it has downgraded Zomato to neutral from buy, and the target price has been cut to 250 rupees from 300 rupees, but still has an upside potential of 19% or so from yesterday's close price. For Swiggy, they have double downgraded the stock to underperform from buy, and the target price has been cut to 325 from 420. It's just about trading around those levels, I think, and much below the IPO price of 390 rupees or thereabouts. And of course, the target is implying 4% downside from yesterday's close price as well. But BofA has noted the fact that their losses in the quick commerce segment, has been increasing, and that's one reason that they have that BofA Sec has downgraded these stocks. There are expectations of rising losses in the quick commerce segment going forward, and even the food segment growth is slowing down quite a bit. But for FY26 and FY27, it expects the EBITDA to be 20 to 50% below consensus estimates, and that is not sounding very good. Cash flows in the food delivery segment is expected to shrink, although the segment has not seen a very material slowdown. But yes, cash flows in the food delivery segment are also expected to shrink. Of course, prolonged competition will lead to higher losses for these companies going forward as well. Remember, Zepto is inching closer to its IPO. Reports were suggesting that the company is raising or looking to raise $250 million via secondary share sale, and for that it has also shortlisted private equity arms of it's in talks with private equity arms of Motilal Oswal and Edelweiss for the secondary share sale. So yes, an IPO can be expected very soon, and that's giving these companies some bit of jitters. And yesterday Macquarie also came out with a very cautious report on Swiggy and Zomato, and they said that they are preferring quick service restaurants instead of these quick commerce names. And of course, the tax cut benefits that were announced in the budget will also flow through to those restaurants. And of course, for these companies, Swiggy and Zomato, food delivery growth will be driven by user additions and stable unit economics. But some of the voices I've spoken to recently, they're saying, if you look at the longer term picture, Zomato and Swiggy are still good bets. But it's only in the near to medium term that they will see some bit of heat due to the rising competition. But I was talking to Gaurang Shah of Geojit Financials today. He also pointed out that from a longer term perspective, he is still very bullish, and he has recommended buy calls on both Zomato and Swiggy. But near term investors, they may see some pressure because of what's happening with more players coming into the fray.
Absolutely, it's not only about more players. In growth in general, probably could slow down. Yesterday we had Colgate, talking about how consumption is slowing on the urban side. So if consumption is really slowing, we don't really know how the quick commerce business growth gets good tailwinds, or rather, the food delivery business in the urban markets probably can show signs of slowdown. Obviously, end of the quarter, we'll probably get to know the quarterly updates are there, analyst notes are there, and the quarterly numbers are there. So probably, post 15th April, when the result season starts, we will actually know as to how the March quarter has gone so far for the consumption names.
That's true. Of course, we are in fact almost knocking at the earnings season. Of course, April is when we will see all these companies starting to report numbers. But Yatin, another, in fact, down day for the market, so to say, second day of losses for the broad end of the markets. First for the benchmarks in the last 7 sessions. Tomorrow is expiry. Let's see what really happens. But of course, it's the countdown for the April 2 deadline has started, and the caution and jitters are quite evident when it comes to the market sentiment. But let's hope tomorrow is a better day. And with that, we're wrapping up. Closing bell. Thanks a lot for tuning in. Have a great evening. We'll see you again tomorrow morning at 9 a.m. Don't forget to tune in. Thank you.